So, welcome everyone. I'm Alexander Mihalcea, and today we're joined by Nick Spiller, co-founder and CFO of SuperFi. Thank you for being here.
Hello, everyone. Thank you.
Before we dive in, could you give us a quick overview of what SuperFi does?
Yeah, of course. So, SuperFi is a financial management app. We have a customer facing product on iOS and Android, and primarily we use open banking to identify whether a customer is at risk of paying a bill or not. And then after they've paid their bills, we reward them for doing so. So, you pay your bills on time, we help you track them, and you get a little reward of cash back every time you do so. You can then use that cash back to redeem it at one of about 150 retailers in the UK.
Okay, that's fascinating. And basically, what inspired you to create SuperFi? Was there a specific moment or experience that sparked this journey?
I think for me, I had always wanted to create my own business, and I'd been working in the sort of fintech industry for a number of years, and I'd worked at early stage startups. I'd seen other people come and go in that space, building their own businesses, and I took a lot of inspiration from them. I think when I decided that I wanted to build something for myself, I went through an accelerator program called Antler and subsequently met my co founder, Tom. And the incubation program essentially sits a bunch of people in a room and you sort of theorize over problems that you've experienced in the past, opportunities in the landscape that you're interested in. And Tom and I quite quickly landed on the idea for SuperFi, primarily rooted from a bit of research that I'd done in the past. And we noticed or we observed that there were many financial apps that were coming out that were all to do with wealth building, financial planning, really focused on those sort of high earners. And we realized that the customers that were sort of almost overlooked were the ones that almost needed that financial expertise more, the ones that were sort of really reliant on that budgeting month to month, that are really sort of trying to make ends meet. And we couldn't really see a clear product that was helping them in the way that we felt that they could be. And so that was why we primarily decided to set up SuperFi, being that sort of Revolut for the frontline worker, that all encompassing product that is able to actually support individuals rather than just sort of showing them their balance, showing them their savings rate, or trying to almost sell them wealth building products for people that don't necessarily have that opportunity. So, like ISAs, investment products are probably a little bit out of reach to the initial SuperFi customer base when they first come to us.
Okay, interesting. And basically, what was your background before starting this venture?
So my background before starting SuperFi, I've always sat in the product and design domain. So I'm still a hands-on designer to this day, leading design teams, and I'd always worked in the financial services industry. So I'd worked in a number of different startups, ranging from lifetime ISA products all the way through to freelancer tax accounts, student bank accounts, and even at one point working for a large high street bank, NatWest. So I'd sort of seen the financial services sort of industry from multiple different viewpoints, whilst also being very hands-on designing these products. And so that was kind of what I was doing before Superfly, which gave me the expertise to really dive into it.
Yeah, I see. So let's go back to when you first
hmm
started. What
hmm
major challenges or gaps did you see in the market that made you think this needs to be solved?
So I think the real gap was the one that I'd sort of touched upon a little earlier. It was the I did a bunch of research quite early on and saw that of all of the residents in the UK, only I think about 90% of them have less than £500 in savings. And you think if all of these fintech products are coming out pushing interest rates and saying you can get this amount on your savings, you can get up to 4.5% or 3.5%. Actually, for the majority of the UK customer base, that's not really going to have an impact for them because they had less than £500 in savings. And so quite quickly, I realized that actually what was on the market was not necessarily what a lot of the customers needed, a lot of these individuals needed. And so I sat down and I tried to sort of figure out through a bunch of research methods what these customers might actually need. And it came out quite quickly that they needed support with bills if they couldn't afford to pay them. We also realized that a lot of people didn't apply for government benefits or social tariffs or some of the support that their bill provider would offer because they simply didn't know about these services. Like a lot of people don't realize that there are council tax reduction schemes from their local councils that actually if you're on a low income, you're probably going to be eligible for in some capacity. But a lot of people just didn't realize that. So myself and my co-founder sort of mapped out the impact that this could have on somebody who is or has a low income in terms of their financials. And actually just one little thing like switching to a social tariff can mean that they're sort of 40, £50 better off
Mhm.
per month. And when you scale that over the course of the year, suddenly if that customer only has £500 in savings, that £40 a month saving almost doubles their savings over the course of a year. And that for me was much more impactful and almost that sort of overlooked aspect of financial products that no one was really talking about.
Yeah.
And the reason why I discovered that they are not sort of like high street banks and not necessarily targeting those customers specifically is because it's quite difficult to make money off those individuals. And that's obviously what a lot of these financial services businesses are looking at. They're going, okay, great. How do we grow our revenue? How do we grow our customer base? And so that's primarily why a lot of these financial services customers were overlooking the sort of SuperFi target customer. And that was the opportunity that we'd discovered.
Okay, that's very interesting. So, could you elaborate on why the existing solutions weren't meeting these needs?
Existing solutions weren't meeting the needs simply because it is very difficult to make money off these customers. You're looking at customers that don't have a lot of financial backing month to month, that are probably a little bit more skeptical about taking on direct debits, subscriptions, that type of thing, and are constantly looking at ways to trim down their monthly subscriptions, their monthly spending, and optimize it. If you've got money in an investment account and that investment account takes a percentage management fee of that value, then instantly they're sort of taking a quite decent fee from that investment portfolio on a yearly basis. The customer almost doesn't notice because their funds are growing. Now you try and do that to a customer that doesn't have much funds, that is constantly sort of thinking about their outgoings, thinking about optimization of their spending, and it's very hard to identify where those margins could come from. And so quite quickly, we realized with SuperFi that we needed to ensure that we were only making money off the customer if it benefited the customer. So we never wanted the customer to almost be at a loss. And so that thread or that sort of ethos thread through our entire business. So we pivoted quite quickly to be B2B to C, which means we didn't want to charge the end customer for our service. We wanted to charge the people that might have been benefiting from that service rather than the end customer. And so an example of that is we sell into councils, we sell into utility providers, and the narrative that we sell into those businesses or those organizations are, we say we will ensure that your customers are more likely to pay their bills on time.
Mhm.
And as a result, they pay for licenses for SuperFi, they distribute SuperFi to their residents or their customers. That customer benefits from the app, but then so does the organization, because all of a sudden they're increasing the likelihood that those customers are going to pay those bills when traditionally those are the most at risk customers. Because if you don't have as much money month to month, the likelihood of you not being able to pay your council tax bill or your energy bill or even your rent increases massively because you are so tight in terms of the money that you've got left over or to spend every month. And so that kind of thread through our ethos. And that was one of the challenges actually that we really experienced early on was how do we make this a VC backable business? And by saying initially we're going to charge customers a subscription fee, that was met with a lot of, well, how are these customers going to afford it? How are you going to make sure that they're sticky? And that led to us pivoting to actually targeting a different model, that B2B2C model, to actually get scale and create an attractive sort of business case.
Okay, okay. So, walk us through how SuperFi addresses these challenges. What makes your approach unique?
Yep. So what makes us unique is the open banking side of things. So we hook into a customer's open banking data. They obviously grant us that access, and then we act as a sort of safety net for that customer. So we essentially project for that individual whether they are on track to pay their bills or not, whether there are optimizations that they could make. So potentially they are on a £50 a month utility provider, let's say a internet provider, when actually they might be eligible for a social tariff rate, which could half that. So we highlight these optimizations that the customer could make. Now, it's not all about switching. So sometimes if a customer is with BT and BT has a social tariff rate, we can instruct the customer to switch over to that social tariff rate without any disruption to their service, essentially. So it's not like they have to get a new router, have a cooling off period, anything like that. It can just happen very seamlessly. But by hooking into the open banking data, it means that we get full visibility of that customer's outgoings and incomings. And so by mapping out that trajectory, we can see at an earlier stage whether they're on track to pay their council tax, for example. And if we can see that they won't have enough money to meet that direct debit or that bill at the end of the month, we can then highlight how to get in touch with that provider. We provide contact details. We can even provide a letter that the customer can just sort of forward on to that utility provider to say, I'm not able to pay, but this is how much I would be able to pay next month, or can we offset the payment, or based on these criteria, I think I'm eligible for a reduction or one of their schemes. And so we sort of guide the customer through that process if they're unable to pay, which is very much the sort of proactive approach rather than reactive approach. So if you look towards that sort of model, if that were to happen without SuperFi, the customer would probably miss that bill. It would then be on the utility provider to reach out to them, to have to understand what their situation is, to then try and sort of claw back or put them into arrears on that payment. Potentially, in worst case scenarios, they might have to send around debt collectors, that type of scenario. But what we do is we're able to almost sort of give the utility provider that heads up that this customer might be struggling, so that then they can have that proactive discussion about what's best in their situation before that customer has fallen behind on the payment.
Okay. And for example, when you talk to potential clients, what's
Mhm.
the biggest misconception they typically have about what you do?
They want to know that it works. I mean, that's the biggest one, because it sounds too good to be true in a lot of cases, where we essentially say we can get the customers to contact you before they've missed a payment. And for a lot of utility providers, they put a lot of money into debt collection, into arrears collections. And this is one of those scenarios where you sort of go, wow, if the customer could tell me in advance that they're going to miss this payment, that will save us a lot of trouble and time and money. It's the same with local councils. Like, the amount of arrears that councils have across the UK per year is in the hundreds of millions. And so you think, if you can impact that metric just slightly, is a huge cost saving to those organizations. And that's why they're so interested in engaging with the solution. Typically, what SuperFi has done in the past is we'll do a sort of pilot run to sort of mitigate some of those concerns that the organizations have of, well, does this actually work? We don't want to sign a really long contract with the business SuperFi if actually we're going to realize that it doesn't have any impact on the metrics that they're looking at. And so we typically run pilots with organizations. We're lucky enough to have partnered with the Greater London Authority, which is run out of the Mayor of London's office. And essentially, what that allows us to do is easier access into all of the London boroughs to be able to distribute SuperFi through a pilot mechanism to residents all over London.
Okay. And also, could you share a specific success story of a client who saw significant results using your solution?
Yeah. So I don't think I'll be able to name them exactly, but I can say it's one of the largest housing associations in the UK. And so a housing association typically has properties that they give out through social housing schemes. So individuals that are on lower incomes, that might be struggling with health related issues or disability related issues, this property company essentially will allow them to live with discounted rent with one of their properties. Now, they also struggle from rent arrears. So, individuals moving into the property that might be seen as somewhat vulnerable that then miss a payment. Superfire ran a pilot with them over 3 months, and the feedback was pretty positive feedback from the residents, actually enjoying the features, identifying ways that they could optimize their bills whilst also having an increased likelihood of paying their rent on time, meant that actually we're now running a larger pilot with that same housing organization. So we're running it in more sites. as opposed to just the few that we ran it with
Yeah,
initially. Yeah.
I see. Wonderful. And now, looking at the broader industry, what key
Mhm.
trends are you seeing emerge?
I think the broader trends that I'm seeing are, if you look at just the space that SuperFi's in, I think it's around how you help customers feel like they're getting something out of the product as opposed to just being penalized. So we initially launched as essentially a sort of debt management positioning and realized quite quickly that actually customers didn't resonate with that because they don't want to be seen as, oh, I'm at risk of falling behind on bills, I'm at risk of falling into debt. And so quite quickly we had to add in a personalization layer that made the product more positive. So we went through this 3 month transformation that decided that we were going to reward customers for completing certain actions, almost introducing that personalized gamification layer, which is one of the key trends I'd suggest, and has taken the product from being something that people were apprehensive to engage with to actually something that's quite exciting and rewarding and giving those sort of dopamine hits as they go through the sort of daily tasks, which has meant obviously our retention has increased, our churn's decreased, and our revenue has increased as well. So I'd say personalization and gamification is a clear trend that I see across the industry at the moment. And it's not just in sort of supervised remit either. It also goes in the flip side of some of those financial services companies, which are more focused towards investment products or wealth builders, where everybody wants that sort of more personalized, AI rooted task list or suggestions as to how they can optimize their finances, how they can grow their wealth more. I think that's probably the most direct trends I'd see. But then on the sort of other side of fintech in general, I think stablecoins are getting a lot of exposure at the moment. I
Yeah,
think when you look at some of the products that are on the market at the moment, whether that be savings products, whether that be FX products, or even just treasury as well, stablecoin or having an element of stablecoins within that infrastructure can optimize cost and also increase sort of the time it takes to perform some of these actions and settle some of these actions. So I think that's a big key area that even we're looking at how we integrate and take advantage of some of those aspects.
right, right. And in your opinion, what do you think most business owners are getting wrong when they're trying to address this specific problem?
Which specific problem are you referring to?
So when they want to adopt the new banking, the neo banking, not the traditional way.
So I think some of the things that the existing banks are not doing right is one being too slow. They're bogged down by legacy software, legacy infrastructure, legacy regulation in a way that they've adopted and haven't really challenged too much. Whereas the likes of say Revolut, for example, are writing a new playbook on how to adapt some of those regulations, how to evolve around them. The fact that in the UK they've only just recently sort of been granted a banking license is testament to the fact that they don't have to play by the sort of regulatory rules. The fact that they were essentially an e-money, well, had an e-money account license up until about a couple of years ago or a year ago, and we're still able to be growing at a much larger scale and have higher deposits than a lot of the high street banks. It just shows that there are other ways to do things as opposed to the existing playbooks. I think as well, what we're seeing now in the industry is this sort of divergence and convergence of products. So it happens every probably 10 to 15 years, I'd say, within finance. And what you see is lots of sort of smaller businesses spin out of a bank that can do individual aspects of that bank better. So you think for FX trading, savings products, investment products. So you think a couple of years back, those products that were diverging were the likes of Nutmeg, Wealthify, Tembo, even Chip, Revolut for FX. And then what you see is this evolution where it all comes back together in that sort of convergence triangle, where suddenly Revolut now offers all of those services that the bank did, as opposed to just the one or two that it was really sort of known for at the start. And so I think that's one thing that the banks don't do well is adapting through that divergence and convergence trend and evolution of some of these products. They almost go, okay, we've built an investment product, great, that's perfect. We'll just leave that as for the next 10 years. but actually what it needs to be doing is still evolving and taking almost the learnings from some of these startups back into their existing product line. I think NatWest is quite good at seeing this. They are beginning to make a lot more acquisitions than some of the other banks. They've recently bought Rooster Money, which is I think it's the sort of younger children bank account to try and absorb some of that younger market. They also bought Cushion, which is a pension fund. And so they're beginning to see that actually the way that they can stay ahead of the market is by absorbing some of these sort of startup companies that are gaining market share.
Yeah, yeah, right. And for example, what advice would you give to these business owners who want to stay ahead of these changes?
I think they need to keep their ear on the ground a little bit more. The number of times that I've been speaking with individuals that work from sort of legacy financial services that are not aware of some of the younger startups that are coming out in their space is quite alarming. So, speaking to some investment sort of firms, and actually they're not aware of some of the younger communities that are popping up in Reddit or even Telegram bots that are covering off a lot of these services that they're known for within a sort of one man show that's been able to pull something together with a bit of a community on X, for example. And I think that's the area that they need to sort of dive into more, understanding the market and understanding what trends are cropping up, not just in the UK, but also globally, so that they can learn from those parallel markets.
Yeah, right. Good advice, though. And as you wrap up, what's next for SuperFi? Any exciting developments on the horizon?
Yeah, so one exciting development that we've got on the horizon is we're looking into, well, we're running pilots for a high interest savings account. Essentially, the narrative that we are, or the customer journey that we're working to, is we've now supported a lot of these individuals optimize their bills. We've now increased their sort of financial position so that now they've got more in savings and they're feeling more confident towards their finances, and they're beginning to go from that sort of everyday struggler to more of that sort of builder individual, where they're beginning to think about their future life, whether that's increasing their credit score so that they can then get a mortgage in the future, or whether that's actually just building up that deposit for a house or for a larger purchase. And so we're beginning to thread into that customer journey a couple of savings products. So to think, how do we now help that customer go from previous struggling financial position to now an actual solid foundations for future growth and for future savings. So there's a couple of features that we're going to be launching within that theme over the next coming months.
Okay, interesting. And for listeners who want to learn more or potentially work with SuperFi, what's the best way to get in touch?
Best way to get in touch with me is probably via email. So nick@joinsuperfi.com, or go to our website. We've got a number of different ways that you can engage with us just on the website, whether that be engaging through our intercom, so our customer support line, or our chat function, or even just looking at some of the features we've got and suggesting improvements to them, or suggesting other ways that we could cut them. That's probably the best way to get in touch.
Perfect, perfect, perfect. So thank you for sharing those insights about you, about the company, and about the whole story. And thank you for this amazing podcast session.
Thanks very much, Alexander.